Alrighty, let's get started again. Thank you all for joining me on this daily market analysis. Have been streaming since the start of the day at 10. Um, so for those of you who have been joining me, we're continuing on. For those of you who are jumping in right now, do drop a message and say hi. Let me know where you're joining us from, especially if you're new to the session. For all the regulars, a big welcome back again. It is Monday, the 26th of August. So we're going to look at the markets. We're going to look and see what's going to happen, right? On Friday last week, when we ended the week, we had Chair Powell come up with a little bit of a surprise. Not much of a surprise, but come up with a statement saying that it was time or suitable time now to look for the Feds to look into cutting rates. Right, we'll talk more about that shortly. Um, we saw the dollar index drop massively following that news, so we'll break that down. Today seems to be a little bit quieter, a little bit more consolidative, but just before we started this session, I saw prices already starting to move a little bit more. Okay, so you can help me out massively by remembering to click on that like and subscribe button if you haven't already. And you can also, if you have any questions at any point in time, please feel free to put into the chat and let me know. Now, with that, a quick disclaimer. Any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product, so please remember that your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Now, that's done. Take that away. Right, so here we are. Not much, like I was saying today, right? Not much in terms of news, but at 8:30 p.m. tonight, we do have the US with their core durable goods orders month to month, or core durable goods orders month to month, and durable goods orders month to month. Durable goods orders was minus 6.7. It got revised from a minus 6.6. It's expected to come out at a 4%. A good recovery. Might not do too much in terms of price because we do have what Chair Powell said on Friday, overarching the current sentiment on the dollar index. I'll tell you more about that shortly. We had the US core durable goods was 0.4, expected to come out flat at 0. Core durable goods in this case excludes transportation items, right? Thanks for that, Sirin. Yes, I have two cameras now. I got one this side. You'll see the second one later as well. Okay. So this camera angle is for the fundamentals and the starting point. So in terms of news, not a lot for today. Through to tomorrow, again, not much, but we do have at 1 p.m. the BOJ with their core CPI year on year 2.1%. No big surprise there. But let's rewind it a little bit into last week. Right, we did not have a session last week on Friday. We did have the Jackson Hole Symposium over the weekend. We had Governor Ueda speaking at the, there we go, click on that, right, at the House of, testify on the lower, on the recent rate hike before the lower house of the National Diet, I don't know what is it, Diet. And then again at 12, testify again about the recent rate hike. Because of that talk on Friday at 8 a.m. and 12 p.m., what we did see on the yen on Friday, where are we? Right there at 8, right? It did pop down, right? It popped down on the first move because what Governor Ueda did say was that, hey, with hike rates, we are still looking to hike rates further. So he hasn't shied away from that decision. Governor Ueda from the BOJ is still looking to hike rates further when markets settle down. And that's why we saw the US yen, or the yen strengthen with the yen strengthened with the US yen pushing down from 146 within the hour down to 145.50, retraced back, and then this was because of Chair Powell on Friday night. Okay, so that was the news from Governor Ueda from the BOJ. Canadian retail sales number, no big surprise. It got overshadowed by 10 p.m. Chair Powell speaking at the Economic Outlook at the Jackson Hole Economic Policy Symposium. What he said, right? It was a video. It was a speech video where it was said that Chair Powell, the time has come for policy to adjust. That's why we're talking about September being the more likely scenario, or almost a certainty. Or now that the Fed is saying we're looking to cut rates in September, right? Chair Powell again saying don't seek or welcome further cooling in the labor markets. Fed Chair Powell saying don't seek or welcome further cooling in the labor markets. Now, employment number is becoming the focal point again, because Chair Powell also said my confidence has growth that inflation on sustainable path back to 2%. Okay, so inflation on the way to that 2% target. That's why the Fed Reserve is comfortable with deciding, or most likely deciding, to cut rates in September, on September 18th. Again, this is what he has said on the 23rd of August. Things can change. Things can change. Things can change a lot. So it's not something that we'll take it as certain as they can be, but it's not cast in stone. There could be things changing, but it's most likely in that scenario. The question now that markets are asking is whether it's going to be a 25 basis points or a 50 basis point rate cut. Okay, so that's the decision for the 18th of September. And now you can see that headline as well. Unemployment is the Fed's biggest enemy now. Powell says not inflation. Inflation battle is almost done and dusted. Now it's back to unemployment, because we have talked about it. Unemployment is creeping. People are spending less. Production is a little bit lower. Unemployment is increasing. More people are looking for jobs and not being able to get a job. So that could lead to the whole recession, increased recessionary fear. And that's why they say that it's the biggest enemy, not inflation, because the inflation battle seems to be done for now. Okay, so with that news at 10 from Chair Powell, what we did see on the dollar index at 10, right? The dollar index was sitting at 101.47 or 101.45. Within, I'll zoom in, I'll take that away. Within the hour, the dollar index pushed right down from 101.45 right down to 100.80, right? To 100.80. Fluctuate. Well, you see that it was way out of the Bollinger, because it was a policy news. It did continue, or it did try to continue pushing down, retrace back up to 101.90, continued down to 101.65 before somewhat ending the week along that 100.80 level, right? So it pushed right down because of the news. Big anticipation that the Fed Reserve could cut rates in, or most likely going to cut rates in September, with the question being 25 or 50 basis points. Then a slight continuation down before a retracement back up, ending the week just along the 100.70 level. Early today, tried to pop lower, retrace back up. I took the Fibonacci of this move. It retraced back up to that 23.6, which again is 100.75, and it's still consolidating along this point right now. Okay, so again, if you remember on Thursday last week, I was highlighting that I was anticipating that, we are moving towards a bit of a priced in scenario on the Fed Reserve decision to cut rates. if they do cut rates in on September 18th of 25 basis points, we might actually see this push back up because there's been so much talk, right? I'll zoom right out and you see there's been so much talk about the rate cuts coming in September. We see the dollar index push all the way down in anticipation of the rate cuts in September, now down to 100.70. Seems like it could be approaching a priced-in scenario. We might actually see this holding at this point. I'll tell you more about that shortly. The next big key level is down at 99.70. Now, with all that said about Chair Powell's speech on Friday night, we did have Governor Bailey speaking, right? Source released speech text 4 hours earlier than scheduled. Wasn't any big surprise there. He said that a more restrictive policy could still be needed due to labor market shocks. So it looks like the BOE, while they did cut rates, might not be rushing to cut rates too quickly, right? They might still stay restrictive for a little while more. Then through to the Jackson Hole Symposium on Saturday and Sunday, no big surprises there. Okay. Then today we do have the UK on a bank holiday for the summer bank holiday. Through that, nothing much. Durable goods. And then through that, all right, the main thing that I would be looking out for, well, not the main thing, what I'll be looking out for is Wednesday CPI for the Aussies, followed by CPI for the Eurozone or German on Thursday, and GDP for the US on Thursday, quarter on quarter, and then ending the week with a flash estimate for the Eurozone and GDP and core PCE price index. I'm going to highlight that so much. Core PCE price index for the US to end the week and the month on Friday, the trading month on Friday. Okay? Good morning, Richard. How are you doing? So now with all that said, then we'll look at the charts. So now looking at the charts here on the dollar index, we've seen that big push down. Right, we've seen that big push down. We've got the fib levels. We have 50% on the retracement level just along that 100, 102 level. So I'll keep that as my resistance. Zoom in a little bit more, you'll see that. That's what we have. Oops, hang on a second. Okay, we've got those highs there at 101.59. I'll have it at 101.60, where we saw it reverse back down now. This was a level we highlighted, right? Could range between 100.80 and 101.60. It broke through. So now what I want to highlight is that. Right, so we saw that move down to this point here. Resistance held at 100, resistance at 100.80. What you could notice as well is a little bit of a down, bounce, down, forming a little bit of a skewed head and shoulder, pause inverted head and shoulder to push back up. Right, so we saw that I can't remember where now. I think it was that point. Now we saw that there, right in the mid of August, where we had that head and shoulder, and we saw a rebound quite strongly back up, and then it tested that trend line and pushed all the way back down. Now, if you actually had this as a trend line down, that would work too. Okay, so that's what I'm looking at with that trend line. No, looking at, yeah, okay. So that could form, but needs to break above that resistance. It needs to go past that point as well at 100 or 101 actually. That nice round number at 50% retracement. So I'm not ruling, as much as I'm anticipating some further downside on the dollar index, I'm actually thinking that we might see a bit of a retracement back up again. Okay, so today being the 26th of August, what I'm thinking is that if that breaks, if that breaks, Richard, Kiwi dollar on the, okay, I'll do that shortly. 1 second. So I'm looking at this on the dollar. I'm thinking that if inverted head and shoulder form or forms and forms and breaks 100.80, could trade up to 101 and I wouldn't, at the most 101.20. I would say 101 to 101.10. Right? So if this head, inverted head and shoulder forms, which means I want it to break above this point and breaks above 100.80, it could trade up to 100, 101 or 101.10 in that area. That could come up to this point before possibly after that turning back down again. Right? If it doesn't, stop doing that, hang on. If it doesn't break that resistance, then we're looking at further downside on the dollar index. Checking the H4 time frame. And check the daily time frame. It seems like if it does break that point lower, a big downside possible. Right? So it's right there. We might at the very most have a little bit of a hesitation at 100, nice round number. That will make sense. So again, back to the H1 time frame. Go. Sorry, I'm messing the chart a lot. Annoying me. Okay, there we go. So it could, so what we're looking at here on the dollar index is that it could test, form an inverted head and shoulder and test slightly to the upside. If it does, I'm thinking that it could come out to this point and reverse back down. What you're also looking for is that it breaks below 100.55 and then we could see it trade down towards the 100 round number. Okay, so in this case also, if 100.80 holds as resistance, could trade could trade down to 100 if 100.50 is broken. There we go. Does that make sense? Put it into the chat and let me know. Okay, so that's what I'm looking at. Richard's asking, have you seen the Kiwi dollar? We're looking at the Kiwi dollar right now. Also on Discord. Sorry, I don't remember the details of it. If that could comment on it. Okay, let me bring that up and do a quick reference to it. Right. So while my Discord is loading again, Kiwi dollar, we saw this on Thursday. We were looking for it to break 6170 to push up towards the resistance. Waited a long time before the news on the dollar crashing down, Kiwi dollar spiking right up. It broke 6170, shot right up 45 pips to 6215. Poked out a little bit more before coming back in again, right? So take that away. I did not get into any trades on the Kiwi. On my trades on Friday was on gold and on the dollar yen, right? So I'll tell you more about that shortly as we come to that. Now looking at the Kiwi trade on the dollar, on the daily time frame. Okay, see that. So Kiwi on the daily time frame, Richard highlighted that resistance, resistance, resistance with that area down here. So just drawing out. For those who are not on the Discord, I don't know why you're not on Discord yet, but that's what we were looking at. 6233. Yeah, about there. Right, so we're looking at that as an area. Then you put question marks up there. It looks like, okay, so that's the question is now that it's broken, so that was actually a little bit lower like that. Right, so the question is now that it's broken, what is likely to happen? I think the picture shows quite clearly that it broke out. It was outside of the this is on the daily time frame again. It's outside of the Bollinger. It's coming back in slightly. What I'm anticipating, right, is further upside, but I think that there could be a little bit of a retracement coming. Right, first, a little bit of a retracement first on the Kiwi dollar. So back to the H1 time frame. Why I think there's a little bit of a retracement is, or consolidation at this point, is that this is a looks like similar price on daily. Yeah, surge up, test, looks like it's looks like it's consolidating, a little bit of retracement. I'm actually thinking on the Kiwi that from this move, now that it's broken 23.6, right, it could come down, and you see that whole, if Diana was here, that whole fair value gap area there breaking out. I'm thinking that it could come back down to about, oops, terrible drawing this, about this point, 6185, before maybe pushing back up again, right? So it's retracing from this big move, thinking that it could come down to this 50% level before pushing back up. This big move up, the Bollinger away, you see that it kind of coincides with that 23.6 level. I don't need that actually, I want that. Right, so I'm looking at that as the bottom. Needs to definitely stay above that. What I'm anticipating on the Kiwi dollar is that it tests 6190, bounce back up. I wouldn't do anything, only if it tests and bounce, then you'll be looking at a long 6225. Stop loss about 20 pips, take profit about 50 to the upside. Okay, so how this looks again on the daily time frame would be like that, right? So it broke out, So wait, let me do that. Yep. So you see this big candle pushed out, retrace back in. It's very similar to this big candle pushing, not exactly testing yet. So this one pushing out, coming back in before continuation up, right? So it can break this resistance. That could be there's a good chance that it'll break this resistance, but I'm actually looking for a slight retracement or consolidation before a a continuation to the upside. Yeah, so a bit. It's not really a false break. It's a break, retrace, and a continuation. Okay. So on the Kiwi 6225 20 to 50. Hope I answered your question there, Richard. 0.6225 stop loss 20 take profit 50. Now onto the Aussie dollar. Same thing. We've been waiting for the Aussie dollar consolidating. Needed to break that 6753 or 55 level to test that resistance. We've been saying pretty much, I think, if I remember correctly, through last week, we've been saying look for a reaction at 6.8 resistance. So it did break out of that area, push right up to 0.68. And what did it do? It hit 6.8 or came very close to 6.8 and then retraced back down again, right? And then retrace right back down. You see that now this level, I don't need that, take that away. I want to highlight this point here, being right at that 23.6 from this big move up. Now, Aussie dollar does not actually seem to have that much of a retrace when to go. It's retraced, but it doesn't seem like it's going to retrace further. I would say that actually with this, you're looking at 6760 between this area as where it would retrace to, right? This whole area is where it would retrace to. So it looks like it's almost done. Could have a little bit more downside, but I wouldn't be buying it up yet, even if it does push up from here, because you're looking at a 30 pip move to the upside. So I would look for consolidate or test and then a push back up. Only if it breaks above this resistance, then we could see a good move higher again. Remember, we are talking about I'll move this slightly lower, okay? Remember, we are talking about the dollar index possibly forming an inverted head and shoulder with a bit of a resumption of strength or recovery of strength to the upside. So that could lead to a push back down. I don't see it on the Aussie dollar at this point. So look for it to break that resistance at 0.68. You'll be looking at 6810, stop loss 20, take profit a good 75 to the upside. Checking the H4, you have a little bit of a hesitation here at 6850. All right, there we go. So 6810. Looking to buy at 0.6810, stop loss 20, take profit 75 with a hesitation at 0.6850. Okay. Then onto the Aussie, the Kiwi. Finally, it broke. Didn't get any analysis on that on Thursday just because it was sitting right in the middle. So it's broken down. What you notice here is that it's found this level. That one is done. Take that away. Trend line is done. Take that away. Now with that, what you'd also notice, or what you could notice here, is a bit of a downward channel, or channel to the downside, right? So you're looking for it to form this level, and this could actually be quite interesting. Now that I'm looking at this forming here, if the Kiwi dollar, retraces and the Aussie dollar goes back up a little bit earlier, if it goes up a little bit earlier, like it is trying to right now, then the Kiwi dollar, which does look like it has some retracement to do, that could push the Aussie Kiwi up, right? It could push it up with a double bottom, breaking the channel. You're looking at 1.0930, stop loss 30, down to this point. Yeah, so I'm looking at that. So break that 23.6, 1.0930, 30 pip stop, you have a 60 pip take back up towards a 61.8. You could be looking at it a little bit earlier, but I think it'll be better to look for it to break that channel, 23.6, and that push up. Okay, so that's what I'll be looking for on the Aussie Kiwi, but it is highly dependent on what's going to happen on the Aussie and also on the Kiwi dollar. You're going to be a little bit more careful with that one. Okay, makes sense so far. Now with that, then we look at the pound dollar. Look at that. Pound dollar on Friday had one of the biggest moves. It was a huge move to the upside on the pound dollar. As it sat there, retraced slightly and broke up, especially above that 1.3140 resistance. We saw it spike up to as high as 1.32, almost 1.3240. Right, so a good move up on the pound dollar. Now, looking at this, you see trend line right up there. Drag this right up. Okay, that's my resistance now turned support. I don't actually think I need, okay, I'll keep that as a support level as well. That one's a bit far away. And then my next big resistance is up there. Right, H4 time frame, just checking my lines. It's up there. Actually, I need a little bit lower. 0.3030. Okay. Okay. So now back to the H1 time frame. Zoom it right in. What I'm looking for, similar, very similar, is that we've seen big moves to the upside. So we want to see a bit of a retracement before continuation, which will be very healthy in this case, especially if it comes down past that trend line and bounce back up. All right. So what I'll be looking for, and we've seen that happen so many times, all the time where it comes down past that trend line and have a good push to the upside. So what I'll be looking for here would be 1.3190, stop loss 40. I'll go for a little bit wider here. Take profit up to 100 and You can do 110. I would go a little bit lower and go 100. 100 would be great as well, right? So push up, retrace down, test that trend line area, bounce back up 1.3190, buy it up 40 pip to 100 and 100 to the upside. Hey Robbie, how are you doing? Hope you're well. Welcome back. 1.3190, stop loss 40, take profit 100 to the upside for the pound dollar. Then on to the euro, done very nicely on that as it came down. Didn't come as low as we expected on that 38.2, but it came down, bounced off, and pushed right up. Right? So it pushed right up and beyond what we expected towards that 1.12 round number level. Now looking at this, we don't need this, take that away. This big move up, I took that, dragged it up here, that's that point there, this one up here. So that's where I'm looking at. I don't expect it to come down to this point. It would be a very big move if it did come down. I probably need that actually. But this whole move up, that all makes sense. Now coming to this point here, I would say again, euro dollar, looking at a possible retracement for now. I don't see it coming all the way down to 1.11, possibly down to that point here. It all depends on what's the dollar going to do. And you guys know I don't like to try and guess and tell you my guess about a retracement because it just could retrace to any point. It's just a best guess on where a retrace to that's forming up. So if I'm looking at this, my best guess is that, yeah, about 1.1155 here. So about that point. So I'm thinking it could sit there or push down slightly before pushing back up again. What I will be looking for here, S bounce, yes, long 1.1175, stop loss 20 pips, take profit 75 to the upside. Okay, so where am I? 1.1175, 20 to 75. 1.1175, stop loss 20, take profit 75 to the upside. Okay, great. Then with that, down to the euro pound, right? Looking at the euro pound, that moved very nicely, right? Look at that. We talked about this, breaking the 85 round number, come down, test, bounce back up, and then come right back down again. So it moved exactly as planned. Came down, tested, bounced back up slightly before coming down. Spoke about a hesitation at 8460. It did not drop all the way, but it came down to 8460 before hesitating. 25 pip profit level. Take that away. Now, sitting at this point here, looking at the pound dollar again, pushing back down slightly. Pound dollar retracing slightly. Euro dollar also expecting to retrace. So on the euro pound, possibly that support is going to turn to a resistance, push back up. Okay, so I'm looking for that to push back up. I don't think it'll go all the way to that 50. I think close would be good enough. Actually, let me think. Let's see. That one is done. We don't need that. Don't need. We'll keep that one there. We don't need that. Take that away. That's reasonable. That's totally broken. Take that away. Okay, so now when we look at this, we have that whole trend line to the downside. So what we're looking at here on the euro pound would be a retrace, a consolidation, slight retrace before pushing back down again. Two things you can do here, or two things I'll be looking out for in this case would be either a test and reject or a consolidate and then a breakdown. I kind of like the test and reject idea a little bit more. So that's where you can be looking at 8490. Stop loss again, 20 pips. Take profit, you got your 35 to the downside, your 40 to the downside, and then maybe further down, right? But I think short term move would be that 30, 40 pips to the downside there. Test and reject. Okay, so that's the view on the euro pound. Yeah, okay. Then on to the US yen. Look at that big drop. So this was what I did on the yen, right? So it's been pushing down through Thursday. We've been looking for it to sell. I've been looking to sell. I only want to sell the yen at this point. Been looking to sell, but it's been pushing right back up, right? Pushing right back up. So as it tested from this top to this bottom, as it tested that 38.2 and it stayed below that 50, a nice round number of 147. I was looking for either for it to test and reject or to test and reject, right? And then through to Friday, it came down to this point. I was so keen on trying to sell, didn't get in. Then I said, okay, if it breaks past this point, then I'll get in. I had my sell at, what was it? I had my sell at one, I had two. So I had one at 145.50. There was an order to the downside, which went order, and I had my take profit down 150 to the downside. Right, just a nice round number of 150 pips to the downside. So that was one yen trade to the downside. Another one was very speculative. I would not suggest it to you guys. Was when it got in as it pushed down. Yeah, as it tested. I think about that point there. At a 50 pip stop. It came very close to hitting somewhere there. I can't remember. Yeah, one as it broke 146. I was breaking 146, and then again another 150 to the downside, back down to this point. Yeah, 50 to 150, just because I want to catch this low. So that's at two trades on the US yen to the downside, all helped by Chair Powell. So thank you very much, Chair Powell, for the downward move on the US yen. Now, as it sits just above that 143.55 level, you see that this point was where it bounced off. I'm still looking for it to consolidate along this level, and then for it to break to the downside towards this low. Yes, there is a 141 here, but for now, not looking at it yet. I'm looking for it to break 143.25, 30 pips to 100 to the downside. Okay, so 143.25, 30 to 100. 143.25. Stop loss 30. Take profit 100 to the downside. And again, if you were on the Discord channel, that's something we were highlighting through that session, through Friday as well. Okay. Then on to Euro Yen. Did not catch this. When I gave up watching the Euro Yen, it finally did what I wanted it to do. You all know, you can look through the videos. I've been talking about it breaking that 61.8. Been looking for that 61.8 to break, and it hasn't done anything through Wednesday, through, when was this? Monday, Wednesday, Thursday, and finally on Friday, just broke through, right? Broke through to the downside. If you caught that move, then you would have good 70 pip move to the downside. That is done. That is dusted. 61.8 is over. It's broken. Take that away. Now we've got that equal low forming or formed on the Euro Yen. Okay, so trend line done. Take that away as well. Now at this point here on the Euro Yen, again, remember Euro dollar pushing down slightly, but yen also consolidating. So I am looking for the Euro Yen to consolidate, maybe retrace a little bit, but you're still looking for that downside. You're looking to sell down 160.50, 160.45. Stop loss would be about 30 pips. Take profit will be about 90 to the downside towards that support level, very close to the 50% retracement from that long-term move to the upside. Okay, so that's what we look for on the Euro Yen, Pound Yen. We had that whole triangle. I was just doing some analysis. I got rid of that. Forming along that slight upward trend line, looking like it's going to break. Now, if you look at this top trend line break, we could see it again. Pound dollar, bit of a downside towards that trend line. Euro dollar yen could drag it down, so I'm looking at it to sit there, very similar to the Euro yen. I'm just thinking, just for a moment, I was thinking, could it bounce back up? No, I think it's going to consolidate. And if it breaks 189.45, then you look at a 45 pip stop and a 90 pip take to the downside here to form again another full low. So I'm looking at it to, press the wrong button, sorry. Get rid of that. Okay, I was looking for it to consolidate, break down to this point here on the pound yen. Okay, then US Swiss franc finally continued to the downside, breaking lower. That's all working out fine. Now at this point, we can take that one away. Don't need that either. Done. That's equal low. Fair enough. That's 50. That's going to hold. Okay. Now this move like that, 23. Right. I want to see, I think it's right in the middle. Again. The US Swiss franc. I don't need that actually. Yeah, keep that. Yep. So again, the US Swiss franc is right in the middle of the support and the resistance level. I do think that if the dollar index does break or test up and then break down, we could see this push lower, but nothing for now. We want to see a reaction here at 8445. Okay, so Squeezy, take a break on it. Nothing for now. Look for reaction at 0.8445. Onto the US CAD, onto the Loonie again. A little bit more volatility than we expected. It did push down, spike right back up, and then a big continuation to the downside. So that worked out quite nicely. But now that the US CAD, don't need that for now, take that away, is sitting just above that 1.35 level. Okay, I'll take that in and highlight the point that the US CAD or the Loonie is sitting just above 1.35, right? So it could consolidate here before testing lower again if the dollar weakens, but I don't think it's a worthwhile trade as it consolidates down and possibly break down towards support. H4 time frame, support level down here. What you might want to prefer to do is look for it to break that support for more downside. All right, so now only if it breaks 1.3460, then we could see further downside. But you want to see it consolidate 1.35, break down, then you'll be looking for that. But I don't think this will be a today thing. I don't see a reason for that big move today. So I think it's likely to consolidate along that 1.35 level for now. Okay. Could consolidate along 1.35 for now. Alrighty. Then last one on gold. Right. So gold, we saw that come all the way down on Thursday. Yeah, let me take that away for now. Right. Okay. So on Thursday, we said some upside potential to 25.18. Beyond that, could trade up to 25.30. But it didn't do that. What we saw on Thursday, where we were right here, right? It sat there, didn't get to 25.15. It came all the way back down to the support at 24.80, which was also that 50% retracement level. Right, it came all the way back down. I did something very speculative. You know, I've had a couple of good weeks on the yen, last 2 weeks or last 3 weeks on the yen. So I took a little bit of a speculative move on the pound, on the gold, where as it came down and it bounced off that support outside of the Bollinger, coming back in, got into that. No, I think not that one. Friday, yeah, Friday at 12. Just had that, and then I had my take profit up here, back up to that 25.30 level. It didn't get there, right? And then as it pushed up, so with that move, then one more thing I did was as it broke above, as it came up and broke, I put in one more trade on that. I was just trying that. No, not that one. Or there, somewhere there. And then again to the upside there, right? when the news came out and it spiked up towards 25.18, I closed up both the trades and that was it. That was done. Now with gold again pushing back up to the upside, breaking 25.18, what you'd be looking for on the upward trend would be for it to continue higher like that. Right, to push up towards 25.30, beyond 25.30, 25.43. So at this point, 25.21 could trade up to 25 currently. Currently 25.31 at 21 could trade up to 25.30. I think that would be the first move. That would be, if you're going to take that risk, yes, to the upside, could be looking to scalp, could be looking for shorter term or medium term trades to the upside on gold. Okay. Yellow dots. Yellow dot. Those ones are my PSAR, my indicator on the PSAR. Not the PSAR, the Bollinger Band. So when the price is outside of the Bollinger Band, then the yellow dots appear to tell you when it's too late to get into a trade, because price is likely to retrace back in again. That's a bit of a warning to tell you when it could retrace back in. All right. Now, I will keep the stream running for a little bit longer. I'll see who is on the session. If you are on, do chat. Let me know what you think. Share some trade ideas. Let me know if you're getting into any trades. Once markets are not really moving or if no one's really chatting, then I'll turn it off. Please remember, trade well, trade safe. I'll see you all again tomorrow on the analysis. Take care now.